Wake up, buy here, pay here people. It's a beautiful day. Go grab yourself another cup of joe and say hello to Jim and Michelle Rhoads on the Buy Here, Pay Here Morning Show. Take it away, you two.
Happy Friday!
Hey, good morning from the basement studio.
Oh my goodness, I did it again.
What is she? She doesn't know her own strength over here.
I don't. Okay, I'm dislocating my microphone stand. We're good.
Yeah.
Solid.
That's all. Yeah. We salvaged the show.
Salvaged this show.
Yeah.
It is Friday.
Yep.
It's been a busy week.
Yep.
And I'm ready for the weekend. And I know all of you dealers out there, it's like some of you, you're heading into some busy times.
Yeah.
So
Yep.
yeah.
Had 2 V8 meetings this week. I'm telling you dealers who are kind of out there just trying to figure it out on your own. You don't know what you're missing.
And even ones that, like, we've got some dealers in there that have done, that are in 20 groups, have done 20 groups, and it's just like a really different way to connect and compare than they've experienced.
Yeah.
So
they're not used to being able to bring a beer or a glass of wine to their buy here, pay here meetings.
Yeah. We were just talking about yesterday about some, would you call it swag or merchandise?
Yeah.
And so we were, coffee mugs makes sense because of the morning show and all of that. And I said, we should do beer steins and have them available for V8 members too, because that would just be funny. I know. It's okay. Well, if that sounds like a good idea, let us know.
Yeah.
So we're just kind of batting around ideas about that kind of stuff. So it was a fun conversation.
Yeah.
It's like,
I was kind of focused on
sunglasses. We could do.
I was focused on things that could be at their desk, but I don't know that a beer stein makes a lot of sense.
Yeah. Do people use mouse pads anymore?
I don't think so. I don't know. I don't know
either. I mean, I don't know.
Yeah, we'll
most everybody's laptop, and it's just finger pads and all that kind of fun stuff. So what announcements do we have?
We got 3 upcoming events. We got on Sunday, starts in Atlantic City, the Marietta Convention. Tommy Brandis says
lots of stuff I'm hearing about that on social.
And our guest today is in that region, so you may have some insight on that. Then you got October 2nd through 4th is the LHPH Summit in San Diego. And then October 5th, we learned, is FIADA for Florida. Yep. So those are kind of the calendar events. And then got a couple more V8. We'll have a couple of meetings each week for the next couple of weeks on V8. So just folks that are, regardless of your account size,
you still have room. And
we got room. One of the 2 of our groups that are 100 to 500, I think you're down to 1 seat in each group. So we definitely, want to make that. And if they miss that, then what that means is we got to wait until we get 4 more people. We wait till we have 4 people committed before we start a new V8 group. But otherwise, just reach out if you want to get involved in one of those. We're having some really, the data is accumulating, and some great
wealth
of information there is just building.
We talk about that all the time, and it's like, oh my goodness, Jim gets, you all know, those that listen, Jim loves spreadsheets. He loves data. He loves to
love may be a strong word, but
I mean, you've got an extreme crush on it.
Okay.
But he thoroughly enjoys trying to look at things from different angles. And so like he'll disappear in a spreadsheet for an hour and a half or whatever. And he's like, oh my goodness, I just looked at it from this angle, and it's like, what valuable information. And so it gets
just
excited.
Trying to offer new ways, especially it's not just new information. It's ways to present the information that can make sense, obviously, to the folks that are need it to make business decisions. Right?
Absolutely. And that kind of ties into what we're going to be talking about today and our guest today.
Absolutely.
So how about if we go ahead and bring in
Ben Clifford,
our guest today, Mr. Ben Clifford,
all the way from
Jim.
Gormley's in New Jersey. I think I saw, Ben, that you live in Philadelphia, maybe, and you cross the river to go over to the dealership in Gormley's. Is that the routine?
Yes.
Very nice. Yeah.
Opposite of the flow of traffic that most people are going into.
Smart.
The city.
You make it work.
Smart.
I remember.
Most people say I'm crazy to live in Philadelphia, though. It's pretty,
I can't say.
We've lived country, we've lived city, and there's some things about city living in the city that I just freaking love.
I do enjoy it.
Yeah.
So yeah, we're glad to have you here. Glad to get to spend a little time with you and get to know. So you want to kind of take our listeners through kind of your background, how long Gormley's have been around, how long you've been a part of it, the whole kind of backstory. We got time.
We've been around. I'm second generation. We've been around since 1990. Gormley's Auto, that's not our last name, obviously. That's actually been around since 1976. There was a Jack Gormley. And when we opened it or took it over, whatever, we just kind of kept the name. It was just on a shoestring budget and, a bit of a reputation. And so we did it doing business as Gormley's Auto and just kind of never rebranded it.
Yeah. So Ben and I have kind of got to know each other. Like there's a lot of folks that through social media, and Ben is one of those people, and we bumped into each other at a conference finally after kind of being connected on Facebook and what have you for a while. And I think what we learned is that Ben and I speak the same language.
How is that?
Yeah, it's
Are you half Spaniard too? He doesn't speak Spanish.
No. It's a buy here, pay here cash flow language.
That yes,
right?
yes.
And so this is something
Cash is king.
Yeah, and so this is something that Ben talks about it quite specifically, and so I've looked forward to having him on the broadcast to be able to talk about kind of how he manages cash flow in particular, because our past conversations, Ben, I know that you and plus the meme. I forgot to get the meme ready to share. I'll grab that while we're I'll show it in a minute, but I'll get that ready while we're
the one that Ben posted.
Yeah,
okay,
so
gotcha.
We got to show that to kind of set the stage for. But in the meantime, Ben, you can share kind of how you formed this idea about how to manage cash flow.
We've just always viewed buy here, pay here as something that should generate cash. I do have somewhat of an appreciation now of the other model. I always thought that was just, I would just think they're not making any money if you're borrowing more money every month. But really, you're making money. It's just in a different way that I'm comfortable with.
Right.
You're building something. I mean, most of the guys that do that can grow and grow at a very fast pace, and they can grow 10, 15, $20 million portfolios. But that doesn't necessarily mean you're cash flowing positively at any size. If you're taking in $1 million a month in payments, and I've met people that do that.
Sure.
But you're selling, you're going 900,000 cash in deal on new loans. You're still only positively cash flowing $100,000, and that's not even nearly covering your overhead of an operation that size. So you're going to be borrowing more every month.
Yeah.
And that's not to say they're not making money, though. I used to just kind of shout from the rooftops, you're not making any money, but they are. They have a huge operation. An operation warrants a large salary. Yeah. And then you're building something of value that they can sell later on. And then the biggest game changer, I think, is reinsurance. That really, if you've got a portfolio that size and you're doing reinsurance properly, you can make $1 million a year plus.
There's a lot of wealth. Yeah, there's a lot of wealth.
A lot of wealth.
Yeah, take home.
So there is. I'm not, saying I know a lot of dealers that do the debt model, but I know there's a lot of people that don't want to do it, and I just have some insight to those people that want to just fight the good fight and try to keep our cash and deal down and try to keep our payments. Try to collect more than we lend.
Yeah. Amen.
Where we're turning in a cash flow profit.
Yeah.
Yeah, for sure. So getting ahead cash wise, it's like seeing that bank account grow, right? Yeah. So I generally have referred to this. I have generally referred to this as kind of the equity versus cash flow model, like kind of what you touched on earlier about.
Yeah.
There are dealers out there who are they're not necessarily trying to create near-term positive cash flow. They're build, and grow equity, and then they expect to enjoy cash flow off of that one day. And so that's kind of what you touched on. They're different. They're different strategies for everybody, but I think it's always been my suggestion, especially when we meet somebody new, is let's figure out what it's going to take to get cash positive. Even if the goal is to have 5 and 10 locations, let's figure out what it's going to take to get location number 1 cash positive. Because, you've met the dealers probably in 20 groups and at the same conferences that I've been at where, they've got mega $1 million portfolios, but they're still out there chasing capital because they require funding. And so what you're really suggesting here, can you share the tile? I've got it but I can't quite reach the thing.
Absolutely.
We can show the thing on the screen there.
We're gonna
I've kind of come to the realization that some of them that it's just the model to keep going in debt and keep growing. And as long as you keep your ratio in line, that's actually okay. I mean, it's not the way I would go, but
keywords being
it's not going to get much bigger, but this is what Ben posted, and a guy sitting at the park looking like, all right, it looks like he's doing some kind of survey or whatever, but he's like, monthly payments minus cash and deal on new loans minus overhead equals true profit. Change my mind.
Love it. Love it. Love it. So I think it's a good way to think about it. It's like when I saw that post, I thought, oh yeah, we got to talk about this, because I just find that there's a lot of dealers who kind of struggle to grasp that, Ben. And you know, you and I talk about it all the time, and it's something that you kind of manage your business that way. You make your buying decisions probably weekly based on.
I think some dealers struggle. I've talked to some dealers who are maybe 150, 200 accounts, and they're going, yeah, I can sell the car, but it's just, I just can't keep up with cash flow. I don't get it. And it's like, well, how much, what kind of car are you selling? $10,000. Well, you need a lot more accounts than that to support selling a $10,000 car, or you need to borrow money. I mean, the math, is the math.
Sure.
You lay it out, and I can tell you, I actually just did this as an exercise to, prepare for this. I took every member of my 20 group, and I broke down their numbers into my meme. And as much as we all look at these composites that are 20 pages, 22 pages long, everyone was like, wow, that's great information. That's great eye opening, because the end number tells you how many loans you can write till you hit zero.
Yeah.
And, most of us, including myself, it's barely, I do about 40% retail and cash deals. So, and that supplements when I don't, so that keeps me from borrowing money, because if I was relying solely on buyer payer, there would be times or years where I would have to borrow.
Yeah.
But I think the biggest thing that maybe somebody new doesn't think about is that cash and deal, it's like we have two overheads. I have minus overhead, which is all your costs that you're not going to get back. I'm not counting about buying cars or repairs that are added to cars. I'm talking about bills that you're not going to get back. All those things. So that's oversimplified there, overhead, but every dealer should be able to break down what their overhead is on a monthly basis. So you should know that number. But it's like you have two overheads, because every car you sell is a new overhead. I mean, mine personally has reached $5,000. And that's considered low in this industry, but it's too high for me. I don't like it.
Yeah.
Because in 2021, it was $3,700.
Yeah.
And in 2018, it was $2,700.
Right.
And I'm looking at it going, is it going to be 6,000? Is it going to be 7,000?
Sure.
If it's 8,000, unless my payments are 800 a month, I don't think I can maintain.
Right. Yeah. It's a tricky adjustment for a lot of dealers. And I think managed from cash flow is really the place to be. And I think, as I hear you talk about that, we've actually started working with some clients trying to move them to a weekly routine here. So this is challenging. It takes people on the team pulling numbers together and what have you, but we're trying to get that information in front of dealers on a weekly basis, because as you said, if you sell some extra cars, great, our receivables went up, but now we need the cash to replace those if we're going to maintain the same inventory level. So managing the cash week in and week out becomes so important. And we can share this thing, Michelle, if I've got, you want to share it?
Absolutely.
And I just set up a real simple model, kind of following that same meme thing that you did, but just kind of laying it out for dealers to have a visual to think about. And, for our folks who tune in on the audio podcast, Ben, we have to always tell them, there are some slides here. So find us on YouTube if you want to see the slides that we're presenting.
Yeah.
And in the meantime, I'll try to talk through them. But basically, I just have your meme laid out there. I have the week's collections on line one there, principal plus interest, and then minus the week's cash and deal, minus the weekly equivalent overhead, which, typically we can break that down, and maybe it's a payroll week. And so we have some extra stuff there, but our positive or negative cash is, what you call true profit. And I think we agreed that, by definition, according to CPAs and those folks, it wouldn't be profit, but it is certainly positive cash that we can spend. It's spendable money, as I call it. It's like something we can do something with. But as you can see, the way I've got these numbers laid out, month or week 1 is positive. Week 2, I left the numbers, the collections and the overhead the same, and I just said if we sold more cars, our cash and deal was higher, then we're negative 10 grand on that week. And these numbers, by the way, are just thrown together numbers just to kind of do some math. But I'm just really just trying to illustrate that this is kind of the methodology that I'm hearing you describe. Is that right?
That's exactly right. And I forgot, but you mentioned it, but I wanted to make that disclaimer because I know there's a certain accountant out there who's probably hanging her steering wheel. I hope she's not driving listening to this, me calling that true profit, because I recognize the accounting principles are different. I mean, there's times where my accountant says you made all this money, and I'm like, no, I don't have any money. I don't.
Ben, we don't
understand, and I don't file my taxes.
We don't talk about accounting on the morning show. That's a good way to lose your listeners. So,
you understand that there's a difference between that. And that profit where it should be positive.
Yeah. And wait, another disclaimer on the accountant side is Jim's like, I'm not an accountant, but I have taught some accountants how to do buy here, pay here, because it is a very different beast.
And that's usually, that sounds a little smug, but it's more like when it comes to the finance companies, right? That gets a little complex. And so we understand that. So often I'm having to kind of coach the CPAs. And I had meetings last week with accountants that represent some of our dealers. So there's one more slide to show, Michelle. I've got it loaded up there. So I think the other thing I've heard from Ben in the past, and I want to make sure that I've got this right, and this may not be your exact method, but I'm really trying, and I just used weeks again, so if I had 3 weeks stacked out here, and I'm really just looking at changes in assets, changes in equity position. And so, you can see up there at the top, for those who are not seeing the screen, you've got notes receivable on line 1, inventory on line 2, cash on hand, including pending deposits. A lot of times there's a deposit, that's going to the bank today or whatever, so that you can throw that in there. But that gives you total assets, right? And now for simplicity, I left liabilities out of there, but you could put your liabilities in there and watch your change in equity, which again, we still can't spend, right? I mean, that's back to the thing. It's important to see from a management standpoint, how did my notes receivables change? But if you're sitting there saying, man, why am my bank account empty? It's because the inventory is up, right? It's just a simplistic way to look at the thing.
I view them almost separately. Like we track our accounts receivable, and that's a whole separate thing that we look at. But we also run a balance sheet where cash is the same as cars. It doesn't matter. They're our main assets, cash and cars. And do they go up every month? That's really what we track, because that's how much wealth your dealership is worth.
Good.
Plus the accounts receivable, whatever that's worth.
Sure.
But if your bottom line, if what you own, if you want to spend all your money on cars, that's fine. Cars are the same as cash to me on a balance sheet. They go on that side. They're an asset.
Good.
So that's kind of what we run. We do it every month. We run we call it doing inventory. But we're basically running our balance sheet. We're finding every car, make sure there's not a car missing, blah, 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 make sure. And did the net dollars of our dealership go up or down?
Right.
And basically what we've managed to do for 30 years or so, we've had some negative years, but tax time, we tend to sell a little more, and it goes backwards, it goes down, and then it sort of, as the year goes on, it progresses, and by late summer, it's back to even, and then it's the last part of the year, the last 4, 5, 6 months is when it goes up, and we have more money than we started the prior year. That's how we kind of run it internally to make sure we're not going in the wrong direction.
It's really important to, I love that you track this, and there's a lot of dealers that don't. And so when you hit, when you're tracking this year over year over year over year, and you're able to overlay, these are the trends through the year, and you get to have a deeper understanding of how money flows through our customers and through us and all of that. Is it when you get to the point where, like you said, tax time, big time, then you get this curve, and we get a lot of repos. And so, I see on social media dealers like, oh my goodness, there's all these repos. And the ones that have been in the weeds for a long time and know the trends are like, that they know that it's going to go down, and they're more concerned about how deep, or and it's so important. We talk about this all the time. It's hard to have an educated opinion about something if you're not tracking it. I mean, gut feelings just don't work.
Yeah, very, very true. We've said that a lot. There's certain times you have to trust your gut, but you really shouldn't when it comes to the numbers, especially of your dealership. You might think, I'm never buying an Ultima again. CB, I got 3 in the shop with CVT transponder. Well, look at the numbers. You've got 30 of them in your portfolio.
Yeah.
So they might not stand out at all. The things that stand out in your mind, like, it may not factually bear out that's a major issue.
Yeah. And there's a lot of, one thing that I've noticed too, is that when we work with dealers that have been in business, have been business owners and understand, the accounting part and the profit and loss statements and all that they have a better understanding about tracking numbers, about seeing trends, about those kind of things. And this kind of flows into something that Rudy Enriquez, 12 million in assets with 65 K in the bank. I think most of us dealers manage our finances the same as a subprime credit customer, paycheck to paycheck.
And that's okay. That's okay. I mean, you left out the question marks and exclamation marks. He's saying that's big numbers. Most of us don't have that kind of cash flow. And it's absolutely true. I just threw some numbers on there. But I think what I heard one thing I want to circle back to, Ben, is you talked about, you have your receivables, whatever that's worth was the word you used. And I'm always mindful when we use the word worth, it's like, back to those bank account things. It's like, even if I have a $20 million portfolio, what's it worth? Well, does it matter what it's worth, what its liquid value is if I don't intend to sell it? Yeah, if I can go leverage it, if I'm going to borrow against it and use those assets, then that's one thing. But its actual worth really matters very little unless we're selling it, right? And so now it's just a question of, obviously, the larger the portfolio is going to drive tomorrow's cash flow, which you would be looking at and factoring in. I just think when I think about dealers operating from gut, in my ugliest version of gut, it's a dealer saying, well, I'm going to buy 10 cars today because my gut says we're going to collect enough money next week for those checks to clear. That's dangerous stuff, right? And so this is where I think we just got to be careful to make sure that we have good numbers. Obviously, in the simple illustration I did, the numbers will be up and down, but we got to know where we're at and be able to manage from that. And especially when these dealers are growing, and we work with a lot of dealers that are in a growth stage, and so obviously they are going to be negative cash for a time. But I think to your point, when you talked about taking the information into your 20 group, which I used to do the same thing as a group member years ago, and I just think what that does is it helps dealers start to see, hey, I'm 14 accounts away from being cash positive, or I'm 35 accounts away from being cash positive. If I keep with this kind of same sales volume and overhead, that's the kind of stuff that we're encouraging people to work to tally and to have available and be able to manage from. So,
yeah. And a number to look at is what % of your portfolio are you collecting every month?
Right.
We have so my number is 5 million, just in case people are listening out there going, well, how big did this guy grow without that? So we're at 5 million. And that's 730 accounts, which most people with 730 accounts would have 7.5, 8 million.
Okay.
But we structure our deals a little old fashioned to keep up with the way I try to do it. So we average still 2,600 down. And we do 27-month loans.
Good.
So what you were talking about on that last episode of trading a customer out at 24 months, we have an 18-month trading program.
Fantastic.
At that point, we're ahead of the game. We write off their balance and put them in a new car.
So
they figured out how to pay us for 18 months. We'd like them to do it 10 more times.
Yeah. So it's less about a large portfolio to brag about.
The dollars in the portfolio don't pay you. The accounts pay you.
There you go. Yep. That's good.
I mean, there has to be enough dollars to sustain it,
Right. Of course.
And we collect about 7% of our portfolio.
Nice. That's good. That's that short-term note. That's what happens. I mean, most of our dealers are probably in the V8 or in the 6% range, so that's principal and interest combined, right?
Yeah.
So, so
7.1, 7.2%.
Yeah, that's a good number to know, a good number to watch. And hey, good morning, Jeff Wilkinson. Glad to have you here. So yeah, it's just it's important to be able to kind of have that information available. One of the things we're doing, Ben, in our V8 stuff is we're starting to have the dealers remit a quarterly P&L so that we can produce this information, at least to have that, because in our V8 thing, it's a pretty simple format. We're really just looking at data coming out of the DMS, but because we have all the data from the DMS, we know what we have to spend to replace cars. We know what we have to spend in, or that what we're bringing in terms of down payments that translates to that cash and deal number you were talking about. We have the incoming cash, et cetera. So now we just need overhead, and now we can kind of paint a picture for dealers, just like what you're talking about how many accounts short, how far away am I from positive cash flow at my current volume and overhead. So these are the things that, it's so important. We just don't hear enough talk about it. Of course, you have pointed out to me that you appreciate that I sit over here and talk cash flow. And now we've established that my mistress, Microsoft Excel, is where I spend my time, doing these
It's
numbers.
an extreme crush.
Yeah, extreme.
Yeah, you and I think Brett Carmichael, talks about it a little bit, and then Ken Shilson, I love his line that there's no return on investment until there's a return of investment.
Oh, good. Yep. So it's a different too, the phrase about cash on cash return, because, you can have ROI if we're talking profit. Phantom paper profit in our business is not difficult. You could raise your prices tomorrow and the customer would still buy the car. You could create additional profit. You could create additional receivables, but it won't change your bank account, next month. Right. So these are all things that we just kind of have to manage from. And I think, most people that are listening understand it. What I find is dealers are busy and they have a hard time getting enough time at their desk to be able to know those numbers, daily or weekly.
What I would tell dealers to look at, if they take away from this, is if your chart that was broken down weekly, I don't know if you want to pull it up again, but how it had.
You put the right one up.
If you did that monthly,
mm-hmm.
So if you just did that monthly, your week's collections, you do it monthly, your month's collections,
mm-hmm.
and your month's overhead, you're going to have a number left over. Let's say it's $100,000 left over. That's before you write. That's your week's cash. Okay, now it's basically your week's collections minus your overhead, minus your cash and deal. Your positive number there, you can divide by how many loans you can write. In other words, your payments and everything you take in, minus your, I don't know if it translates it actually to that chart actually, but if you take your payments and what you recovered in like other repos, or if you do other recovery,
mm-hmm.
deduct your overhead, you have your positive cash flow before your new loans.
Sure.
So most deals are going to be left with, I don't know if you're left with 100,000, divide that by your cash in deal.
Sure.
And that tells you how many loans you can write before you reach zero.
Right.
And, you'll see that a $9,500 cash in deal, well, you can write 2 loans at $5,000 cash in deal. So
mm-hmm.
that's going to double your cash flow by
right.
selling a cheaper car. But you have to balance it out. It has to be a car that can last the life of the loan.
Sure.
It has to be, so we try to have a 2-year warranty on everything we have so that it basically lasts the life of our loan.
Yeah.
But I find that, my average car at $6,500, I think you can deliver a quality car at that price that's going to last 2.5 years.
Yeah. And I think, because we work with newer dealers, a lot of our dealers are in that category of 100 to 500 accounts, and so that just means they're at a stage where, because as you said, a lot of them need to, with overhead and some sort of volume, they probably need to move to 350, 400 accounts to reach any
mm-hmm.
positive cash flow, right?
Right. But they're not, but the biggest thing is it's like, I know you want to sell a more expensive car, but you just can't right now. Unless
you're the thing that I've observed, 10,000 foot, I've not been born and raised in whatever in the industry, is that sometimes what the lot looks like is what the type of cars and the hot stuff or the whatever it's important to the dealer because it's an image thing. But when you look at cash flow or you're looking at how much should I be spending on a car and all of this, and they're saying you can't get the kind of inventory that you currently have on your lot for $6,500. But if you change how your lot looks and your customer is still going to be the same, your your finances change.
Yeah.
Your cash flow
Right.
changes.
I mean, the only real solution if you want to have that nicer car is, and it gets complicated, but this is what we do. But we also have 2 separate lots. Retail, if you want to retail and do some cash sales, and have a buy here, pay here. So we do have some of that flashy stuff, and that actually helps our buy here, pay here store, because some people that come in on it are close to qualifying, but they don't, and we walk them across the street and they're buy here, pay here customers.
And then 18 months, you're trading them up, or
that's exactly it. That's the whole spiel.
Yeah,
love it.
Yeah,
we'll see you in 18 months.
Yeah. So I think
that challenger then.
Yeah. Why is it always a challenger?
Yeah, that's always the one that catches the
Durango.
But you know what I mean? It's like that seems like in so many lots that we've been on, that's the eye candy.
Yeah.
That's out there in the front.
Well, it's because the Charger's a little more affordable than the Ferraris and the other stuff that would also catch attention. But it's definitely a good strategy. We like to hear that. And I think, it's just, I always I'm thinking we didn't talk about it, Ben, but you want to be able to pay yourself. And you can't pay yourself with receivables. You can't go shopping at the store and tell them you're going to pay them with a buy here, pay here contract. It's like, you need cash. And so the point is, your business needs to generate cash and put money in your pocket in addition to, all these things we talked about. So it's like, we gotta figure out what it's going to take to get cash ahead, because otherwise we're just drawing out of we're pulling out of our pool of capital all the time, or our receivables, in order to do that.
That's part of the overhead. That's part of the overhead in the equation.
Yeah.
If I could get these Cliffords off the payroll,
Yeah. Well, yeah. But we should let Ben get back to being a dealer. We appreciate you making time to chat, and it's I'm sure that we'll have occasion to have you back here. But glad finally we got to get connected and get you on, so that our dealer listeners could pick up some tips from a guy who's out there doing it.
Yeah, and if you want to stick around for just a second until after we are done saying goodbye and closing out the show, so we can say proper goodbye. But we really appreciate you joining us today.
I appreciate you guys, and we all do. You're a great asset to the buy here, pay here world. And
thank you.
Thank you.
Free content. It looks like the V8 groups are a great thing too, but you guys really are.
Thank you very much.
All right.
Thank you.
Thank you. All right. I'm going to go ahead and put you backstage, and it's Friday.
Yep.
Great conversation. Really appreciate it. I like it when people are kind of like popping in, and it's like, this is, so keep the comments coming.
Sure.
The comments are,
and keep the
fun.
memes coming.
Keep the memes
see more
coming.
of those memes. Yeah. So.
Jim loves memes. And it's like this morning he was talking about, did you see Melanie Goldman's? Do y'all know?
Thank you, Melanie.
Thank you, Melanie, because he's like fruit, donuts.
Yeah, fruit.
That's the answer.
Her post, for those who didn't see it, fruit that brings in those annoying fruit flies.
And it's the
have
year.
You ever seen fruit flies around donuts?
I have not.
You have not.
I have not.
Obvious
That's
solution.
exactly it.
Right.
Hey, everybody. Thanks again for joining us. Again, we are no longer doing Mondays.
Right.
So we'll be back on Wednesday. And I'm sorry. I know. Darn it. It's a great way to start the week.
Yeah.
Have yourself a great weekend, and enjoy your cash flow.
Yeah.
All right. We'll talk to y'all later. Thanks, guys.